Quick intro so you know who we are. Wise was founded a decade ago to solve the complexity and costly nature of international payments. And that business model happened pretty organically. You see, there were two friends in London. One was getting paid in pounds and needed euros. The other was getting paid in euros but needed pounds. And they were tired of the costly fees of sending money abroad, so they started exchanging between themselves using the mid-market rate, the one you see on Google, Bloomberg, Reuters. And from there, a business idea was born. And a decade later, we have 12 million customers sending $8 billion abroad every month. And our products include Wise Account. This is what you're probably most familiar with, used by consumers and small businesses, allowing them to send money from one country or currency to another, hold more than 50 currencies, and get paid like a local using account details in more than a dozen countries. And there's also the Wise debit card. This is used to spend while living, working, and traveling abroad. And I think of small businesses who can use it to pay for goods and services in other countries as well. And we have the Wise platform. This is where we partner with banks like EQ Bank, credit unions, and enterprises like Google Pay, who integrate our services into their own apps and platforms via API, and you'll get a powered by Wise experience. So maybe one day when you're using your bank's app and you click on send money abroad, you'll see powered by Wise pop up. If anyone here listening is interested, send me a note, whether email, Twitter. Happy to respond and happy to initiate some conversations. And much like our founding story, our mission is money without borders. And those pillars include instant, convenient, transparent, and eventually free. That's what international payments should be like. Now on to the topic of today's conversation. Can Canada become a global leader in fintech innovation? We have a lot of incredible fintech companies here, a lot of talent, but has the industry scaled to its maximum potential? And how does Canada compare to its global competitors? So let's look at some metrics. First, we'll start with this study from Finexible that looked at quantity of startups, adoption, and the regulatory environment. And they found Canada ranked 12th of 20. That's not horrible, but it's in the bottom half. How about consumer adoption? I personally think this is probably the most important indicator because this is the goal, right? Help consumers, help end users. This report from EY found Canada ranked 23rd of 27. That's near the bottom of the list, unfortunately. And how about the cost of financial services? This is a payments conference after all. So let's look at international payments. World Bank looks at the average cost of sending money abroad and found Canada was the second most expensive of the G20 countries. That's not great. And how does this, remittances relate to fintech? Well, we know digital services are far cheaper. So therefore, adoption and the lack of adoption is keeping costs unnecessarily high. So those metrics might not have been the most favorable, but does that suggest Canada is a fintech laggard globally? A lot of experts think so. That's certainly the opinion of a lot of my friends who think the industry has a lot of room for potential that just hasn't been realized fully yet. More importantly, though, what do consumers think? A recent survey from Paytex of Canada and FData, two fine trade associations, they found that more than two-thirds of Canadian consumers believe that competition in the financial services sector will lead to greater choice in products and lower fees. How about small businesses? Similarly, 64% thought they would benefit from increased competition. So how can Canada go from being a laggard, if that's the case, to a leader? And how can fintech better succeed? Going back to Kanye West, reach for the stars. So if you fall, you land on a cloud. I'm optimistic about the future of Canadian fintech and its ability to drive consumers. The market is ripe for growth, but Canada is not the first to grapple with these same challenges. Other countries are trying to improve financial services too. And so what can we learn from them? The market will ultimately drive success, sure, but the government can play a key role in jumpstarting it. I spend a lot of time working abroad, fortunate to travel and spend time with governments thinking about these same things. And there tends to be a lot of similarities in these conversations. Payments modernization is a buzzy phrase used by policymakers around the world right now. And while these countries are at different phases of their modernization journey, some would say Canada is a bit behind. Policymakers are similarly talking about instant payments, modern licenses, expanded access, and open banking. And makes sense, right? Because in heavily regulated industries like financial services that rely on public infrastructure, that's what payment rails are. Policy decisions can play an outsized role in boosting innovation and competition. Fortunately, it's encouraging that these same things are being talked about here. The Canadian government, like those international competitors, is already focused on these topics. So let's start with instant payments. 60 countries around the world already have real-time payment systems. I'm guessing most people watching know that. Canada's not on that list currently. And the impact of that, if it takes 3 days for payments to settle, that harms financial inclusion. And that means consumers might pay for expensive check cashing, overdraft fees, not sufficient fees, and small businesses lose access to working capital. It's pretty painful. It's a friction that is inefficient. That's why policymakers have to care. That's why obviously the industry cares. Fortunately, our host here at Payments Canada, they're trying to change that. Modernization plan is coming, and real-time rail will launch next year. And everyone involved in international payments, like me and those my colleagues at Wise, we're excited. It'll include ISO 20022, modern data standard used for payments messaging. But of course, there has been criticism that RTR is launching later than initially planned. 2022 now. We're looking at next year. Some of the plans had it launching by now. And it's also concerning that that initial launch won't include important features for innovation and competition like alias directories, requests to pay. You know, if we want innovation, if that's a goal of policymakers, then sending payments to email and phone numbers or easy bill payments via text message, those should be prioritized in an RTR. After years of consultation, new payments license, the government's going to launch this soon. And until now, believe it or not, Canada didn't have a federal money transmission or payments licensing regime beyond registration with FinTrack. Many of you know last year's Budget Implementation Act included this document here, the Retail Payments Activities Act, used to be called RPOF, Retail Payments Oversight Framework. Basically, this is going to put Bank of Canada in charge of regulating payments companies. They're going to have to register, and then they'll be supervised. And while it may seem simple, unfortunately, the process is taking agonizingly long. There's regulations that need to be developed, the supervision team that needs to be in place, and then that registration and oversight takes time. We're looking at 2024 at this point. Ultimately, it's really important for the Canadian payments ecosystem. It's going to build consumer trust and a sense that there's reliability and safety in the payment system and those who operate in it. And that could lead to, once those companies have obtained these new licenses, access to the payment system. And that means for these eligible payment companies becoming members of Payments Canada and then directly clearing and settling payments. So the government has previously proposed multiple rounds on this topic. It's called the Amendments to the Canadian Payments Act. That's the statutory change that's needed. But the way it works is simple. Today, payments companies like us, like Wise, we rely on our bank partners to originate payments on our behalf. Whereas if you had direct access, that would allow direct payments origination and settlement, removing the intermediary. And the benefits of that are pretty obvious for the ecosystem, especially for end users, which again is one of the keys of policymakers here, along with boosting innovation and competition by no longer relying on the payment rails of a competitor. Think of that, right? That's an inhibitor to innovation when it's your competitor who holds the key. And then also reducing risks and bringing greater visibility to the operations of companies like Wise and lots of homegrown Canadian companies. And then ultimately, it is those lower cost, faster payments that'll be crucial. Unfortunately, as was perhaps long expected or at least hoped would happen, this was not included in the recent budget. And that's likely due to recent events. I think everyone realizes there were some recent political developments. And there may have been a perception that these changes could have led to more risks. But actually, it's the other way around. I think hopefully that last slide described how this would reduce risks in the system and bring more reliability and safety and consumer protections. And so hopefully this expanded access to the payments system eventually gains enough support to become law, as the benefits are significant. And then finally, there's open banking. Of course, open banking already exists, but it's the practice is entirely relegated to screen scraping. And I would argue consumer rights to data are pretty limited currently. The effort is gaining momentum, at least when it comes to government attention. Last year, when the advisory committee's report was released, this included 30 key recommendations on scope, governance, and a number of other measures. And importantly, someone who gave a fireside chat this morning, there was an open banking lead announced, and this will help drive the framework forward. I think there's an understanding from all of us that this will be market-driven for the time being, but it's crucial that the government remains supportive and engaged. And on things like what open banking entails, it should expand from being solely read access, as envisioned at this moment, to eventually and hopefully be prioritized to include write access. Read access, sharing data, write access, that's allowing payments initiation. And that's been key to enabling new account-to-account payment rails in the UK. That's what's going to deliver the most significant benefits. So if these policies and policy initiatives come to fruition, Canadian payments can become world-class. They can catch up to the rest of the world. Electronic payments are simply the exchange of data. Sending money should be like sending an email. It should be instant and free. Now that's an aspiration, but ultimately that is the direction we're heading, as close to free. There'll always be some cost as possible. And digital payments, why are we talking so much about it? Why do policymakers care? Not all payment methods are the same. The benefits to end users are notable. Look at this data from the World Bank. This makes the case in terms of the difference in payment methods. This has brought down the cost of digital payments in a historically high-cost financial service. That's international payments. Digital is key. That's why the World Bank and global policymakers are embracing it. How about here in Canada, though? Check out some stats from Payment Canada's 2021 report. It found that the only payment method growing over the last 2 years was electronic payments. Now, certainly COVID played a factor from 2019 to 2020, which is the data included here. But perhaps more importantly, the main reason, or at least the main consumer preference, was speed. This is why instant payments matter. Modern payments infrastructure, RTR that's coming, and then adoption by industry. It is what consumers want. And we see this internally from our customers over and over again when we do surveys or look at NPS comments. So it's clear that speed and price drive customer preferences, and the decisions of policymakers in these coming years are going to heavily impact those metrics. Now, I highlighted 4 policy developments that are on the way. That's instant payments, modern license, access to payment rails, and open banking. So back to today's original question, can Canada become a global fintech leader? I think the answer is yes, but only if policymakers prioritize those 4 policy initiatives and implement them to their full promise. That's why it's crucially important. We can't have any more delays. We can't kick down the road on key elements, because if that happens, then yes, I'm optimistic about Canadian fintech, because competition and innovation will flourish. And that is how Canada becomes a global fintech leader. Public policy will play a key role. So thank you, everyone. Thanks to Payments Canada for the opportunity. I'm glad to take some questions. Okay, I see some in here. I'll start with the most recent one. How do you see developments in cross-border playing into this work? Certainly, there's a lot of attention from policymakers around the world. Central bank digital currencies. People are looking at stable coins, crypto, blockchain, and one of the most important use cases that are highlighted is the ability to positively impact international payments for the better. Now, at Wise, I mentioned our mission earlier, things like instant, convenient, transparent, and eventually free. That's how we work. That's how I work in my role, policy and regulatory strategy. That's how product managers work. How can we improve each one of those pillars? We have not yet seen how these new emerging technologies can help us deliver any of those better than we already are using domestic payment rails and existing payment methods. But yet was the key word, right? We're watching it like everyone else. I think it's important that governments spend time on this, but we're making the case, and I'm making the case here today, that with these existing policy priorities, you can deliver some of those same goals. Again, go back to our mission, those 4 pillars I highlighted. If you looked at the financial stability boards, the 4 pillars they look at, they have this big years-long effort to improve cross-border payments. They're saying the same thing: speed, cost, transparency, and then they're saying access, whereas we say convenience. So if those are the goals, talking about the same thing, you can accomplish some of that with existing rails payment methods. But who knows what the future holds? I think it's important that we keep looking. I see a comment here from David Sutherland asking, what country do we model our payments policies after? I think UK is probably one of the first that I know for a fact that many Canadian policymakers and regulators and those that have been engaged in this effort in recent years have looked at. The things we talked about today, an instant payment system, modern license, access to the payment rails, and open banking, all of those have been implemented already in the UK. They've had for well over a decade, probably going on 15 years now, an instant payment system. What's interesting is one of the challenges that they're facing now is they built it, long enough ago that now to build some of those features I mentioned earlier, like alias-based routing, directories, request to pay, it's really hard to build on top of now because it wasn't from kind of the V1. And that's why it's so important that these are prioritized within Canada. And I do know the system is being built, so they'll be able to be added on easily and adopted. But in UK is a cautionary tale, and it's part of being the first mover, right? It just is harder for them to build it on top of. It's not as frictionless. And then you think of things like we have an e-money license in the UK, so we're regulated based on the risks that we provide to the system. We became the first to gain direct access to the payment system, so we originate and settle payments ourselves. That 2018 that started, and the impact was we dropped customer prices 20% immediately, and it's gone down since. Our UK-based customers may pay half or less than what our Canadian customers do. Large part of that is that access to the payment system. And then on speed alone, even with an instant payment system, when we rely on a bank partner, the average settlement time for finality may have still been 15 minutes versus when we originate and settle ourselves, not relying on that bank partner, the average time is less than 20 seconds, which is how I would define instant. And in open banking, of course, payments initiation exists. That has created new payment rails that are lower cost. So those are some of I think the UK is probably viewed, and that's what the EU has probably looked to the UK and some of the stuff that they're working on. Some of it they've already adopted. Australia, Singapore, now Japan's looking at it. US is probably behind Canada, but the US has a market that has developed in a different way. So that was entirely market driven, but there's some dynamics there. And US tends to be a little later responding on regulations by design, you could argue. So let's see. What are some other questions in here? David, I appreciate the engagement. I was worried I wouldn't have any questions. So this is exciting. So how Wise implemented settlement in the UK? Well, we're a tech company. right? And we are tech driven. And that's often some of the differences you'll see between a fintech that is really tech versus a traditional bank. It's not the business people driving decisions a lot of the time. It's the tech people, the engineers and the product managers. And so we spent a lot of time with the UK payments authorities, the payment system regulator, the Bank of England, where we settle, and ultimately, just held hands with them and testing. And it wasn't easy for us. We probably spent a lot more time doing it than those that followed us. I guess similar to, or a bit analogous to the UK example with our instant payments. They were first. It may be more difficult. We weren't afraid to be first in the UK, so we had growing pains and building building those integrations. But now that's actually proven to be a resource to other governments around the world. So the team at Wise that built that direct integration with the UK, with the Bank of England, with the faster payment scheme to originate payments, we now offer them, technical people around the world in different countries. And I think there's been some interactions here in Canada when they just want to know what was that like? How did it happen? It's very, very technical, as you can imagine. So very exciting to see all these developments. Let's see some other questions here. There was one that came in at the very start when I first logged on about Wise mentioned policy priorities. What would have been the ideal inclusion in the budget from Wise's perspective? Now, surely we're often not thinking about how it impacts Wise, right? That's not how we operate as a company. It's about how it impacts our customers and ultimately end users at whole. Like, hopefully we prove to offer such a valuable product and service that you all and customers, small businesses, consumers will use Wise. But it's the ecosystem. It's ultimately those end users that need to benefit. That's why we push these policy initiatives. And so that's things, in the budget specifically, would have hoped to have seen the amendments to the Canadian Act included. And that's how ultimately we would expand access to payments rail. That's something that has been proposed. Several proposals, consultations have come out. Payments Canada has worked on it. I know it wasn't included this time because of some recent developments, but hopefully next year that's different because this will probably require some statutory changes. But in the meantime, I do think Finance Canada, Payments Canada can continue this work even if it hasn't become law yet. I also think things like open banking, real-time rail, maybe the payments license. There's an argument that it didn't need, those are all already moving, so it didn't need to be cited. But I still think it demonstrates important support to the public, and so for that purpose, it would have been helpful to be included. There was a section on digitization of payments, so that was encouraging. This is a trend. I think everyone knows that we're going this direction. That wasn't particularly, I think that was government payments, digitizing them, but it still demonstrated that the government is thinking about these things. In terms of Wise on a crypto payments platform, we don't offer crypto at this time, like I mentioned earlier, in terms of CBDCs, blockchain, crypto, stable coins. We're looking at how these things can help us achieve our mission. I'm very serious when I say that's how we work. This isn't just Kool-Aid or everyone talks about being mission driven. We really are. I have to my work, I have to demonstrate its impact by how it can impact those things. But we haven't seen the clear use case yet. We're continuing to look at it, and if we think it will help us achieve the mission, those pillars in our mission, then maybe that'll change. But that hasn't been to date. So realizing about out of time here, I'm seeing the speakers chat. So I just want to say thank you everyone for joining, your engagement, and really excited about everything happening in Canada. Feel free to email me or hit me up on Twitter. Very eager to continue the conversations. And if you want Wise Platform integrated within your own, please let me know. Happy to kick off those conversations. It's a good way to offer lower costs, faster payments to your customers, which will boost customer acquisition and increase retention. So thank you all so much. Again, to our host, Payments Canada. Enjoyed the time here.